Big short investor Michael Burry warns that silliness is back in the stock market while consumers are cutting back on restaurant spending. We have data showing smart money and dumb money are betting on the opposite direction. What silliness, you might ask? How about from the red hot retail stocks that are about to report their earning next week? This will be a great show. See you soon. And of course, smash the like button. Welcome back everyone to my Audacious Money channel, where we talk about stocks, bonds, and commodities markets. If you like any of these markets, consider subscribing to my channel, and of course smash the like button if you do enjoy today's video with me. Let's first talk about the silliness in the market. Palantir up 50% in the last 1 month alone. Coinbase up 80% in the last month. Even my beloved Honest company was up 40% from the low. Tesla was up 40% the past month. Beyond Meat was up more than 60% the past month. And Cloudflare was up 70% in the past month. If you bought any of these stocks last month, you are laughing right now, aren't you? I bet you are. Michael Burry warned that the market silliness is back in the recent tweet. The Big Short investor compared the current situation to the stock market crashes of 1929 and 2008. Familiar Rona era silliness is not dead yet, Burry said. Markets are starting to behave irrationally again, according to Michael Burry. The investor of hedge fund manager warned of a rise in the silliness after the S&P 500 rallied 8.6 to bounce back from 2020 low. The silliness is back, Burry said in the now deleted tweet. After 1929, after 1968, after 2000, after 2008, the strain of silliness that transformed bulls into bubbles completely and utterly disappeared. But that familiar Rona era silliness is not dead yet, he added. Burry is best known for his betting against the mid-2000s house bubble, as despite in Michael Lewis's book, The Big Short, Kristen Bale subsequently portrayed him in a film adaptation. Burry also inadvertently fueled the meme stock frenzy by purchasing a stake in the GameStop, placed high-profile wagers against Elon Musk's Tesla and Cathie Wood's ARK Innovation ETF last year, and has tweeted numerous times that the pandemic era surge in asset prices would culminate in a historic crash. Burry also tweeted after 2000, the Nasdaq had 16 bear market rallies above 10%, averaging 22.7% before bottoming down 78%. We just had a CPI print of 9.1% last month, a historical high of 40 years. One of the Fed's mandate is stable prices. We have a long way down to 2% target, so we know the Fed must continue tightening. Let's see on August 10th, what's the actual CPI number? It was expected to be 8.7 right now. We know high gas and food prices are affecting consumers. Do people still go to restaurants? Some consumers are cutting back on restaurant spending, but CEO says not all the chains are affected. Some restaurant chains are reporting weaker sales or traffic. McDonald's and Chipotle said low-income customers are spending less, while higher-income customers are visiting more frequently. Starbucks and Blooming Brands and Restaurant Brands International said they aren't seeing big changes in consumer spending. Some restaurants are reporting weaker sales or declining traffic in the second quarter, signaling that diners are cutting back on eating out to save money. But CEOs are split on how consumer behavior is changing and whether it's impacting their companies. McDonald's Chris Kempczynski and Chipotle Mexican Grill's Brian Nicole are among those who told investors that low-income consumers are spending less money at their locations, while higher-income consumers are visiting more frequently. Other chief executives like Starbucks, Howard Schultz, and Bloomin' Brands' David Deno said they haven't seen their consumers pull back. The mixed observations come as restaurant companies hike menu prices to pass along higher costs for ingredients and labor. Prices for food eaten away from homes have risen 7.7% in the last 12 months, ended in June. According to the Bureau of Labor Statistics, people are also paying much more for necessities like gas, toilet paper, and groceries, stoking worries about the possibility of a recession. Historically, pricier fast casual and sit-owned restaurant chains typically see sales deteriorate during slowdowns as people opt to stay home or pack their own lunches. Fast food tends to be the top performing restaurant sector as people trade down to cheaper meals when looking to treat themselves. More clues about how dining habits might have be changing in the store next week when salad chain Sweetgreen, Applebee's owner Dine Brands, and Dutch Brothers Coffee report earnings. Here's what restaurant companies have said so far. Hunting for deals. Restaurant Brands International, which owns Burger King, Tim Hortons, and Popeyes, said that it hasn't seen significant changes in consumer behavior yet, but CEO Jose Sill said there's been a modest uptick in diners redeeming paper coupons and loyalty program rewards. It suggests people are looking for good value for money, Sill told CNBC. Yum Brands this week reported lower same-store sales in the U.S. for its KFC and Pizza Hut chains. In its second quarter, through the figure rose at Taco Bell. CEO David Gibbs told investors that the global consumer appears to be more cautious, that the low-income U.S. consumer has pulled back spending even more. But Gibbs also warned that it is hard to generalize about the state of consumer. He noted the multiple factors affecting behavior, including inflation, the absence of last year's stimulus checks, people working from home, and people going out again after the pandemic. This is truly one of the most complex environments we've ever seen in our industry, he said. Choose Tex-Mex, which has locations in 17 states, said it's seeing a broad-based customer slowdown that can't be split by income levels. The casual dining chain also blamed record high temperatures in Texas, which discouraged diners from sitting outside where they tend to drink more alcohol. Still spending, Starbucks Schultz reported that the company hasn't seen coffee drinkers cut back on their spending. He chalked it up to the chain's pricing power and strong customer loyalty. Starbucks reported 1% transaction growth in North America for its fiscal third quarter. Some restaurant companies have focused on keeping prices relatively low to draw in consumers and gain market share over the competition. For example, Outback Steakhouse owner Bloomin' Brands said it decided not to raise its prices to offset inflation entirely. Instead, its menu prices were just up 5.8% in the second quarter. We don't see consumers managing their checks at this point, Bloomin's Deno said on Tuesday. In fact, in some of our brands, we're seeing continued trade-up. To mitigate inflation, Bloomin' has been pulling back from discounts and limited time promotions and focusing on cutting costs elsewhere. Outback's traffic fell compared to 2019 levels. Texas Roadhouse said its consumers traded up to large steaks during its second quarter. CFO Tony Robinson said that alcohol sales have been weakened slightly, but there hasn't been any noticeable shifts in the food ordering. If you are worried about if Fed is going to tighten this economy to recession or an 18 months long recession like Elon predicted, why not write a book? A book is your own asset. It earns royalties for you and your children, and it's part of your legacy on this planet Earth. I am a best-selling author, and I would like to help you write your first book today. and publish it for you. You don't need to worry about anything. Just write what excites you most in your life. Let me show you some of my clients' books. So I'm just going to show you some of my clients' books. This is one. It's called Wicked Pussy. It's called Wicked Pussy Perfume by Eazzy. Such a beautiful cover photo. I love this cover photo so much, and it's such an amazing book. So I just wanted to show you this one. I will post the link for you so you can order a copy too. Okay. So I'm going to show you my next client's book, Lee Vincent. They're the three most important influencers you need to meet by Lee Vincent. And I did write the foreword in this book too for her. So I will post the link for that one too. And then there is Ignite the Passion, Co-Create Your Dreams by David Vine and Jama. And it's an incredible book. It's actually with a whole bunch of collaboration. This one, so it has actually, this one has 8 collaboration authors in it, and it is a great read for you, an entrepreneur book. So I will post the link for you for this one too. And this is one of my books here, The World is Awakening. The reason why I want to share this one today is I really think that the world is awakening to all the possibilities for each person personally, like what they can do for themselves and not just work for someone else. So a lot of people are waking up, starting to become writers and messaging me and stuff. So I'm very actually thinking that 2022 is a year that people are going to start awakening, and the world is going to start awakening. So this one is all about awakening and making shifts in your life. So now I'm going to share my thank you book. This one, the reason why I wrote this one is gratitude is such a huge part in our life. And by saying these 3 words, thank you, and just saying that every time you get something that you want or something that you are getting close to achieving, those words are very powerful. I will actually share the link for this book too, so you can order a copy. And this one is all about gratitude. So. Okay, so I hope you've enjoyed my video today. Please like my video and subscribe to it. That would be great. And remember, it's never too late to start investing and to start writing a book for yourself. I hope you've enjoyed my video. Please subscribe and have a great day. Thank you for watching. Bye-bye.